Good morning. It's Tim at 8:30 on Friday, February 12th, and we have been treated to a surprise announcement by China to raise the reserve ratio requirements for their banks another 50 basis points. This is the second time in a month. The indications are that this is a continuation of a preemptive move by China to try to tamp down the economy and the bubbles that are concerned across the property and the banking sectors. The reality is the markets were caught off guard by, I think, this announcement going into the Chinese New Year. People thought maybe we would have gotten an announcement over the New Year holiday sometime. Yesterday's inflation numbers were quite benign on CPI, although food inflation prices have been something that continue to worry the Chinese government. So shouldn't be a big surprise that it happened. The timing is a bit of a surprise. Certainly takes a little bit of the air out of the view that we have had a nice little window to rally. It certainly knocked markets back today when, in fact, otherwise I think we could have had room to take this rally through the long weekend. You add that to the fact that people are pressing hard on Europe now, pressing hard on the euro. Dollar is very strong, and I expect the dollar continues to go through these levels, but at 80.63 on the dollar index, the Dixie, we're all the way through back to July. So we're at the highest levels of this recent dollar strength. So we're as high as we've been, meaning the market is continuing to test the dollar higher, the euro weaker, mostly out of the concerns that it's going to take more than just a verbal and a signal and a message to get Greece and some of the fringe states in Europe back on track. All of this means that we've had, a weaker but a somewhat mixed approach to the news flow. Now, remember, Asia was closed after much of these announcements were made. So you had markets in China which are up 1%, India up 1.5%, Taiwan up 1.1%. The only market that bucked that trend was South Korea, down a hair, and that market did close a little later than these other markets. So the point being, this China news was not into those markets. They will react when their markets reopen. Into Central and Eastern Europe, Russia's down 1.7%, and that's absolutely in line with the concerns here. The big hit to commodity prices, commodities which had risen nicely yesterday, but it's not just it's not just Russia. Turkey's down 1%. Currency's weaker across the board, and that's again sympathetic to dollar strength. Not necessarily born out of concerns that some of these other countries are going to get pulled into the into the carnage, but it's unquestionably a dollar strength period. And as we open up in Brazil, we're down about 91 bips. Chile down 44. South Africa's down 37 bips. So certainly the commodity producing countries feeling it more, and commodities for the most part have moved back nicely. In fact, the CRB is down about 125 basis points this morning, with the exception of nickel and aluminum, which are very strong. Other metals are weaker. Copper's down 2.25, and notably oil is down about 2%. So U.S. just came out with retail sales numbers this morning. Those numbers look on the headline here to be better than expected, up 0.5%. So we'll continue to watch that and hope to speak to you soon. Thanks.